On this video, we're going to be talking about refinancing your auto loan. Too many times people buy a car and they're paying double digits on their car loan. They're paying 12%, 15%, 25%. But I guess it really just depends on what state you live in. You might even be paying 29 or 30%. But in Michigan, the highest interest rate that you can pay on an automobile loan is 25%. On this video, we're going to talk about reasons why you should refinance. Now, it is a myth. Now, myth is, it's not true. You do not have to wait 6 months or a year to be able to refinance your current auto loan. The reason I tell customers to wait 6 months to refinance their auto loan is because if they have bad credit, they need to make on-time payments. But if you got great credit, you can go next month, 2 weeks from now, and you can refinance that auto loan to get that low interest rate. Most people that are paying double digits on their automobile loan are not even thinking about refinancing. The only thing they're thinking about is what their payment is every month and trying to figure out how they can make their payment. They're not looking at how can I lower my interest rate. They're so excited that they have gotten that car loan that they're not thinking about maybe trying to save money later. They're only thinking about, I got the car of my dreams, I got the car I wanted, I got transportation, but they're not thinking, how can I save myself money without giving the bank or giving the credit union or giving the financial institute all their money every month? So it's a myth. You do not have to wait 6 months or a year to be able to refinance your auto loan. But if you have bad credit, you want to make 6 months to 1 year payments on time. Now, another reason why people want to refinance their auto loan is because they're going to get a lower interest rate. Getting the interest rate is the easiest part, right? But I want to say one of the hardest part is finding that right institution, find that right financial institution that's going to actually lower your interest rate. One of the first things what you want to do is you shop. You get online, you make some phone calls, you find out what the interest rates are. Now, if you quote an interest rate and they haven't pulled your credit, know that they have to pull your credit. Just because you see the interest rate online or on paper doesn't mean that you're going to qualify for that particular interest rate. Remember, what you see online on paper is not always necessarily true because it depends on the term of the loan. When you refinance, was it going to be a 3-year loan, a 5-year loan? Because remember, the shorter your term means the lower your interest rate. So instead of coming out a 5-year loan and trying to refinance at the credit union and do another, just say a 4-year loan, right? Then you're doing a 4-year loan, that means your interest rate is going to be higher. So the shorter your loan term, the lower your payment. So if you're coming out a 5-year loan that you actually just started, and maybe you're in that first year, and then you want to turn and get into another 4 or 5-year loan, your interest rate may change a little bit. But remember, the shorter the term, the lower the interest rate. So that means if the lender's going to lend you, say, $10,000 or $15,000 for 3 years, you're less risk. So they're going to give you a lower payment. Let's say it again. Lower term, lower payment. So the more years you take that automobile auto loan out, the higher your interest rate and the higher your payment. Now, another reason why people look to refinance their auto loan, they want to get that co-signer off their loan. They want to get on the loan by themselves. So on this video, I just want to give you reasons why you should refinance, but also know that you do not have to wait that 6 months to a year, again, unless you have bad credit. Then you need to make some on-time payments. But the customers out there that got great credit, stop playing around. Go refinance their auto loan. But let me just tell you this. If you refinance that auto loan and maybe you had tire and wheel, or maybe you had gap insurance, or maybe you had a warranty on that loan, remember, that doesn't go with your refinance. That old loan is going to be paid off. You're going to start with a new auto loan. So if you want a warranty or if you want tire and wheel, you got to get that at that financial institution. Now, another tip I want to say is, if you watched any of my videos and you've been following me, I'm a big fan of credit unions. Credit unions, I love credit unions. The reason I love credit unions is because credit unions are nonprofit. They're for the people, by the people, they love the people. Remember, Bank of America, Chase, Huntington Bank, they're for profit, which means that they're not going to care about your situation, right? They're all about making money. They're not looking at your situation right there and there. They just want the money. Money, 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 money. Money, money, money. That's what they want. They're not looking at your situation. Credit unions will look at everybody's situation different. So if you're in a higher interest rate on your car loan, go ahead and refinance. But also, if you're watching this video, please subscribe to my channel. All right, I'll see you on my next video.